Hello traders, the title of the video is how to spot a 38.2% Fibonacci retracement, a high probability trade like a pro. All right, wouldn't it be nice to be able to spot the 38.2% Fibonacci retracement, uh, a high probability trading setup like a pro? All right. I think yes, okay. So I wanted to show you here. So I promised traders, Fibonacci traders, that I will be talking about. I will be recording more Fibonacci trading tutorial about the 38.2% Fibonacci retracement. It's a very beautiful. You usually see excellent trading setup, and the signal that we receive at 38.2% level are usually beautiful trading signal because the price usually will run fast. Most professional traders love to trade around the 38.2% level. If you are somebody who is trading what we call a continuation trade, so you heard about continuation, most of the continuation will take place at a retracement of 38.2%. All right. But you want to understand, that's what we are discussing. So check our playlist relating to the 38.2% level. Grab your favorite drink, all right? Sit down, lock yourself in your room, all right? Don't let anybody disturb you. Spend the whole day and watch all the tutorial. All right, can you do that? All right, if you have time. All right, so what I say briefly to traders is that the 38.2 Fibonacci retracement training setup will often take place after a strong bullish or bearish momentum. Looking at this chart, can you see a strong, okay, a bearish momentum on this chart? Yes. If you did, all right, that's good, all right. So if we see a stronger bullish or bearish momentum and the price rally to the 38.2% level, we will investigate. So I don't want to talk about what we have discussed before. I don't want to upset experienced traders that are faithful to us, watching our video all the time. So I'll refer you to our most recent video relating to the 38.2% level. Okay, here it is. What you see? Here it is. Strong momentum, bearish momentum from here to here. Now we apply Fibonacci retracement from here to here. Look, 38.2% level. A bearish trading setup like this, double top, any bearish chart pattern at the 38.2% level after a strong bearish momentum like this, usually, not always, not guaranteed, no money printing machine is more likely, high probability, there may be a high probability trading setup. I will be very interested in this trade. So when you are selling it here like a pro, mean that we are using TSCWSY08 or we are applying a different time frame trading method. This is the setup right there. Don't just sell it like an old-fashioned traders. Break it down. Daily chart, monthly, daily chart, hourly time frame, or daily chart, hourly time frame, 10-minute time frame, or 4-hour time frame, 50-minute time frame, 3-minute time frame. All right? Or hourly time frame, 10-minute time frame, 3-minute time frame. Or if you're a position trader, yearly chart, all right, monthly chart, daily chart. You are a position trader, using the quarterly chart, 3-day chart, or weekly chart for the signal, entry, or the 4 hours, or 2-hour time frame to control the risk. You will also check the economy news and the fundamental for sure. Yes or no? You will. Because, in fact, I want to mention very fast that a TST WSYS trader did ask me to record a video about how to sell and hold. So you thought I've forgotten. No, I did not. I did not forget. I will be recording a video. I'm working on it. I will be recording a video when I explain to traders how to sell and hold. And some traders say, Joe, you are evil trader. How can you tell people to sell and hold? Professional traders sell and hold. So I will talk about it in another tutorial. So because we want to sell, especially if you are swing trader and want to sell and hold, it's crazy. Take it from me. It's crazy not to check the economy news and the fundamental. Listen to me again. It's crazy for a swing trader to sell, not to check the fundamental and economy news. That's what I would say for now. All right. So this one is a high probability. All right. It's 38.2% Fibonacci retracement, high probability trading setup right there. Why? Strong bearish momentum and a bearish chart pattern in a zone of 38.2% level. Common settlement is broken. We use a different time frame trigonometer. We are selling it. Our first target is what? This one here, this support here. Don't ignore that. In fact, we can say there's a midpoint target before that, but the ultimate target is this one. If it goes below that support, where is the next target? You should know how to trade this now. Go like this. Go like this. Okay? Again here. Did people take profit at the next target? Yes, they did. They did. Right there. There's a target there. Okay, you see? You see the price bounce up here? It's because of that projection of the height of this move up to form the second top or double top. So price break below the neckline, yes or no? So the double top, that's it. We measure the height of the double top, we project it below the neckline. The target here, it bounce up, we test it. Now, so we are talking about 38.2% Fibonacci retracement, high probability trade setup. So there's one here. There's another one, this one. This is a very beautiful 38.2% Fibonacci retracement, high probability trade setup. Why? We have a combination of different good reasons why we should sell. Let me explain myself a bit. So we have a very strong bearish momentum, which means strong bearish momentum means that the market is saturated by the bearish traders. Strong bullish momentum means that the market is saturated by the bullish traders. Now, those bearish traders, now they put their signature here. So a double top is a signature of the bearish traders. If the common settlement is broken, now we receive a signal to sell. If there is no signal, we don't sell. That's it, very simple. Okay, now you bring this one peels through it. All right, they are bringing it here. Look at that. Not only that, so strong bearish momentum, market saturated by a bearish market participant. Signature of the bear, another good reason why we should sell. Now, a lower high below the first lower high after a double top is what? It's a high probability bearish trading setup. Triple red signal. Triple red signal for TSTW24 traders. Right there. Okay? So after you have spotted this high probability trading setup of 38.2% Fibonacci retracement, don't let yourself down. This is another chance here. So if you are selling here, what is your target? Your target is just there. It's a shallow one, just there, just there. You see, you see what I did here? So they turn around a bit here. You see, I'm on a monthly chart by the way, so which means for 3 months the price hung around here because of that target here. Okay, this is what we are. This is what going on all the time now. So you project it down like this. Next target. Are you seeing what's happening in this messy market? Did they take profit there? Yes. For 4 months, it hung around that target level. Okay. Now it come down again. Are you seeing it now? Am I opening your eyes? Can you see now that, okay, this is how you will spot, okay, the 38.2% Fibonacci retracement, high probability training setup like a pro. Similar scenario can occur also when we have a strong bullish momentum, all right? Price pull back to the 38.2% level, form either a double bottom chart pattern or an inverted head and shoulder chart pattern in the 38.2% zone. We implement a different time frame trading method because we want to trade it like a pro And most importantly, we will check also the economy news and the fundamental. If it's going up, we set a target measuring the height of that double bottom chart pattern. Right? So your first target is the neckline. Right? Sometimes the price will break it, but the neckline retest it and so on. Now, so this is a high probability bullish trading setup at 38.2% Fibonacci retracement level. The first higher low above a double bottom chart pattern after a strong bullish momentum in the zone of 38.2% level is what? A triple green trading signal for TSCW24 traders, which is a high probability trading setup right there. So this will conclude our discussion today about how to spot 38.2% Fibonacci retracement, high probability trading, high probability trade like a pro. If you have any questions, suggestions, blah blah blah, please put in the comment section. I always read the comment. Sometimes I may be slow, all right. So sometimes to the post comment they say, "Oh Joe, you didn't read it." I read it, okay. Maybe I didn't reply yet, okay. And in due course, I will reply to your question or your blah blah blah, or I may ban you from the channel if you break the YouTube community rules. It happens sometimes, but not very often. We don't want to ban traders, all right? So this is it, all right? So you spot the setup, don't jump on it and sell or buy straight away. Okay? Learn how to apply different time frame trading method. That will be very helpful. Combine it with the economy news and fundamental. If there is no signal, don't buy or sell. I said it, okay? Very important. If it doesn't set for you nicely as you expected it, at a key level, where the risk is low. Don't be part of it. Be patient, okay? If you set nicely and you enter the trade, and then it's working for you, try to secure your gain. You want to get paid, isn't it? So you are swing trader, you enter the trade, you are risking 50 pip, all right? Now it went up 70 pip. You can reduce your stop loss to 25 pip or 20 p. Have you ever been taken out of the trade when the price start going up? So it happened to me before. That's how I know. So you enter a swing trade, and that particular the enter it went up 100 pips, and you look at it, you are smiling all over the place. Everybody asking you what have you seen? Why are you so happy? That you say it's a beautiful day, but you didn't secure some of the gain. The next the price gap down, take you out. You don't want that. You don't. It's not nice feeling at all. It's not nice feeling at all. And continue to go down more. But you could have taken some profit, or you could have reduced some losses. So adopt a defensive approach. This is what I'm saying to you. Be very defensive and protective because your money. All right. If you have so much money you want to give away, you know, go to our website and click on the donation button. That's what I say all the time because it's not good to waste money. All right. This is it. All right. So if you like the video, give us the thumbs up. If you forget or you log in another time, remember to give us the thumbs up. That will help us because YouTube will freely promote the video. You say, oh, everybody like this video, everybody like the video. Okay, all right. They promote it for free for us. Okay. Do you know that sometimes I promote video for free myself? I pay for it on YouTube. I do. All right, so it will be free promotion. All right, if you give us the thumbs up, okay, and also if you comment, all right, that will be very good for us. Also, sometimes if you like it, I see this sometime when I post video, especially new video, and some trader for different reasons, maybe they say that George, I don't like it, or George, I don't want you to be talking about the same topic all the time. George, I'm tired of this, I'm tired of that. You don't understand. So they mark it down. If the first two-person mark it down, but the video is excellent tutorial. The next thing that we usually see, we see more like because other traders say, who marked this video down? And they quickly mark it up. Okay. The same thing, sometimes if you post a very useless video and the sound is too bad, all right, or my accent was not from Texas or Bombay, and somebody give the thumbs up, another person say, why are you talking about this? Usually we can't even hear his accent, we can't even hear the sound, and they start marking it down. So your rating is very important for all YouTube creators, all right? And it's free, it's easy, all right? Just give the thumbs up, all right? If you like it. But if you say, George, you keep talking, the video is too long now, I'm upset with you. It's I want you to talk about CCI. If you want me to talk about another tutorial, don't mark the video down because that's not honest rating. You are not rating a video, you are upset because you want me to talk about another topic. What you should do is to write in a comment, George, would you mind to talk about that another topic? You mentioned CCI, RSI divergence, CCI divergence, and so on. Then that will be a comment, not marking it down, all right? But if you think that a video is poor, and you say it's poor, really poor, George, all right, mark it down and go away. All right, that's simple. But if it's about the topic, put in the comment section, okay, please. All right, and I appreciate that. All right. So I'm talking about YouTube a bit now, okay. But if you say, George, all right, I like this video very much, and I want to own it, and I want to use this strategy, what you should do, if you want to use a trading strategy taken from me, share the video. Just share it. Why? Because you don't want other traders to be trading against you. You want many traders to know about that strategy, or especially in the forum, so that they don't come when you are buying, they start selling. You see, this is going on sometime, all the time, all right? So you too, if you too see that a lot of people are sharing the video, they will promote the video for us for free. They say, oh, many share. So they see all this, somebody embed the video, somebody sharing on Twitter, Facebook, scoop it, and so on. See all this video, people like it, all right? So they promote it for free. So it got more exposure. All right. And you say, all right, now, okay. So peacefully you can trade. You won't have many traders doing the same old method messing up your trade. They will recognize it and say, yes, this is a high probability trading setup. And they won't waste your time. All right. They won't waste your time because sometimes you buy, you place your stop loss, you see what's happened very often. All right. So let's talk about it because we finished the topic. Now we can dwell on this. So sometimes you place your stop loss 70 pips. You've done everything correctly. All right. Now they push it, push it, push it. And they come almost to 10 pips to your stop loss. You say, what? What's going on? This is what John said, there's a high probability setup. So you move your stop loss a little bit 10 pips. And they come again 10 pips. You see? And finally, before it start going up. So it was very, very stressful trade for you, yes or no. Or sometimes they may even take you out. So they come and they take you out 10 people when you decided not to move your stop loss anymore. So they push it down a little bit, 10 people more take you out. And then here it is going up. Have you seen that before? If you have been in the financial market, you have experienced that already, all right? So that's why I'm posting video about Idiot Wave, Fibonacci, all these things. And I, personally, I'm proud of what I've done on YouTube, all right? Like other traders, YouTubers. So the reason why we are doing that for free is because free education also helping us as a trader, other trader are aware of it. Now they know that if the stochastic is overbought, doesn't mean sell, okay? Go away, don't sell, okay, all the time, all right? It can break above that resistance and find a support. If the stochastic oversold, sometimes it can go down. If it break below that support level and find a resistance, we can sell. Sometimes what they will do, all right? So you buy, okay? So what is happening here? They are wasting your time. They are wasting your time, okay? Instead of you being paid. So the good news is that the best scenario is that you enter the trade, all right? You place your stop loss there, and price turn around, and they don't challenge your stop loss. That's the best scenario that we want in a trade. And it happens sometime when we have a high probability. You see this one here? You see how the price after it break below that common center line. It went up a bit. Look, it's a nice, no straight trade. Here again, look at this one. A nice trade. It's what you are looking for. All right. So you want a trade that is not too straightforward, and it will come through education. All right. Talk about it in a foreign zone when you see somebody talking about a strategy that is poor, or somebody talking about a trading system. You ask them, what is the market principle that is governing your trading system, and they don't know, or you can point out to that person what they should be doing. Or you see somebody trading, you say, but I can see that you are violating the market pattern. All right. So there could be a comment you place on YouTube, on one YouTube video, somebody you see buying when the price was in a declining channel. You say, oh, we had a losing trade. You can point out, well, you were violating the market pattern, by the way. Or the price was at a target level. That's why you shouldn't be buying there. It should allow you to break below the target and retest it here. Why were you buying here like that? Why were you selling here like that? Something like that. So that would be a constructive comment, educational comment on a YouTube video that can help other traders. You're not going to say it like you are putting the trader down and say, "Oh, you don't know what you are talking about." Blah 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 blah. No, you just say, "I'm sorry. I think normally in this case, the mistake that traders are making is this." You just point it out and then no further comment. That's it. All right. That's it. So this is about how to spot, okay, uh, a 38.2% Fibonacci retracement, high probability trade like a pro. Happy trading to you all, and I will speak to you soon. So if you truly think it's a valuable tutorial, feel free to share it on video bookmarking site. All right, and you understand why it's important to share video. You are helping yourself and also others at the same time. I do it all the time. I share videos and I record video. I talk about my own strategies so traders know it and they don't fight anymore. One example is the TSTW24. I talk about the moving of 100 because I say if the price is above a rising moving of 100, please guys, it's telling that the bullish momentum is strong. All right, it's bullish. Don't start selling it like that. Wait, that it goes below the moving of 100. And a lot of people over the year learn from it that when the 50 is above the moving of 50 is above the 100, don't just sell anyhow. Have a good reason why you should sell. You see, we talk about overbought stochastic, overbought RSI, overbought CCI, and a lot of traders learn from us, and you can do the same thing. You can have a YouTube channel where you can talk about things that you want to talk about or trade that you have taken, and all you need is a screen recorder, and you start okay doing the same thing. And by educating traders more, you have what we call efficient market. Am I talking too much? Yes, 5 minutes extra after 70 minutes of this video. I want to talk a little bit more. It's good to talk. So if you watch it up to this point, it means that, okay, you want to understand everything. Happy trading to you all. And thank you for putting up with my long discussion today. Happy trading to you all.